So there are about 6 things that I think we need to consider when we're doing our tax returns. This is based on my experience doing tax returns and also doing tax returns for myself. So hopefully this video will help you out in doing those. And we don't want SARS knocking at our doors as well. Number 1 is travel allowance. If you receive a travel allowance from your employer for the use of a private vehicle for business purposes, there may be instances where you can claim certain deductions against that allowance in your tax return. To claim this deduction, you would have had to keep a travel logbook for the tax year. Firstly, you would have had to keep the opening kilometers on the 1st of March 2021. And also to make sure that you kept that logbook for the entire tax year. It's not necessary to have kept the details of your private travel for this. Thirdly, you would have had to record the closing kilometers on the 28th of February 2022. Then you calculate your total kilometers. So that's your opening kilometers minus your closing kilometers. And then calculate the total business kilometers. So for every business trip, you have to keep the following: the date of the travel, the kilometers traveled, the business travel details, where the trip started, where you went to, and the reason for the trip. So something else just to note is that traveling from home to work is private travel and you can't claim a deduction for that travel. So you'd have had to keep a separate logbook for every vehicle used for business purposes. Private vehicle that is used for business purposes. To keep this logbook for at least 5 years, so that in case SARS audits you, then you can use that as your supporting evidence. So there are 2 ways that you can claim for this deduction. So the first one is to claim based on the cost of table that SARS provides, and the second method is to claim based on your actual costs. Remember, you need to keep this logbook for at least 5 years just in case SARS audits you. Then you can use that travel logbook as your supporting evidence. Second one is medical credits. So medical credits are used to reduce the amount of tax that you pay to SARS, and this is usually deducted by your employer. Any portion that's not allowed in the current year is not allowed to be rolled forward to the next year. So if, for example, the allowable deduction is more than your contribution to your medical aid, then the portion falls away and it can't be carried over to the next financial year. So medical tax credits applies to fees paid to a registered medical scheme for that taxpayer and their dependents. This credit is usually taken into account by the employer when they're calculating your employee's tax that needs to be withheld and paid over to SARS. Any individuals who are, for example, self-employed or retired can then claim the medical tax deduction when they're doing their annual tax returns. So there are instances where additional medical tax claims can be deducted. Additional medical credits apply to any qualifying medical expenses, for example, out-of-pocket expenses paid for the taxpayer or their dependents. This is a rebate given in addition to any medical tax credits subject to limitations. So this additional credit depends on the age of the person and also if the person, their spouse, or their child has a disability. So SARS provides a list of qualifying expenses and also how much can be claimed on the SARS website. Number 3 is having more than one income. So it can happen that a person who has more than one employer can find themselves at the end of the year having to pay more for tax. So the South African tax system is based on adding all your sources of income and then determining how much tax you owe at the end of the year by applying the progressive tax system. That is then applied to the progressive tax table to determine your final tax liability at the end of the year. So the progressive tax system means that the more that you earn is the more that you pay. If you add income A and you add income B together, that can actually bump you up to the next tax bracket. So by deducting payee every month, the employer is actually helping the employee to pay tax in advance. So where there are more than one employers, that employer will then deduct payee based on how much they pay you. So when all sources of income are added together, it can then result in more tax being paid. By adding all the sources of income at the end of the tax year, this can actually result in the employee owing more money at the end of the tax year. So to fix this, the taxpayer can actually arrange for a voluntary additional payee to be deducted by the employer. First option is that the employee can go to all of the employers and ask for a certain percentage to be withheld for payee each month. The second option is that employer goes to one or more of their employees and asks for a certain percentage to be withheld. This one is a little bit more complicated, and if you need some help or you find yourself in this situation, the best case scenario would then just be call SARS and ask them to help you with this calculation. 4 is rental income. So if you rent out a property, that income that you earn from the rent of that property is subject to tax. Rental accommodations may include things like holiday homes, bed and breakfast establishments, guest houses, renting a section of your home, dwelling homes, or other residential dwellings. This rental income needs to be added to other income. However, there are instances where some deductions can be applied against income. If you receive a deposit, that deposit is not subject to income initially when you receive it. However, if you apply a certain portion of that rental deposit, for example, if someone breaks something in your house, then it will be subject to tax when you do that. There are instances where some expenses can be deducted against that rental income. Only expenses incurred in the production of that rental income can be applied against that rental income. The following expenses may be deducted against the rental income. These include rates and taxes, bond interest, advertisements, agency fees, insurance, homeowners insurance, garden services. Repairs and maintenance can be allowed as a deduction against that rental income. Repairs and maintenance are expenses that you incur to restore the asset to its original condition. However, improvements are capital in nature and you're basically making the asset better, so cannot allowed as a deduction. Number 5 is tax-free investments. So the tax-free investments that are allowed are, for example, licensed bank, a mutual bank, or South African Postal Bank. You don't have to pay any tax for these, but these are subject to the annual or lifetime limitations. Any annual limitations that are not applied are forfeited. If you get returns of the investment, for example, interest on that investment, and it is added to the capital amount, that doesn't affect your annual or lifetime limitations. Something else to note is that your tax-free investment account cannot be used as a transactional account. Number 6 is home office expenses. So if a person uses a portion of their home or a room in their home for work purposes, a portion of the expenses incurred can be deducted against you. So some expenses that could be seen as home office expenses include things like rent of the premises, cost of repairs to the premises, expenses in connection with the premises, rates and taxes, cleaning costs, electricity. So I did another video where I spoke about credit cards. So I spoke about interest rates, interest-free period, how interest rates are calculated, minimum payments, and many other things. I'll link that in the description below and also in the end screen, and hope you watch that as well. Something else to also just note as well is that we need to remember that the closing date for tax returns this year is 24 October 2022. The good news as well this year is that SARS will auto-assess many people. If you agree with the assessment, you just log on, you check it, and there's nothing else to do. However, if you disagree, you just log on to the website, you make the necessary changes that you want to make, and resubmit the form. Thank you so much for watching this video, and goodbye.